notify everyone that this will be, let me close the transcript. This will be recorded as usual. So anything you say will be recorded and it will be uploaded. So let's keep the chatter down to the CDFM at this point. This is Helen Thomas and the CDFM study group. If at any point while we're going through the material, if you have questions, please stop me at that point. Before I go into fiscal law, I think I need to say this because a lot of the traffic that I'm getting now, if an individuals that are having difficulty with the material or they failed a portion, if you approach this exam expecting to see word for word what's in the study guide on the test, you're not going to pass. That's why I keep stressing. You got to understand the processes, what's going on. When you look at a topic, what are they talking about? They're talking about budget formulation, execution, then what's happening underneath that. You have to understand the processes, the key players involved. Are we talking Congress, DOD, OMB, GAO, all these acronyms? Do we know what they mean? And are we talking, so you kind of get a grip. Do you ladies understand what I'm saying for those that are on the live?
Yes, ma'am.
Yes, ma'am.
Okay. Because some military tests, and what I understand also, when people take the 1-week course, sometimes the instructors may highlight certain areas. I will not recommend that you only focus on those areas. As I mentioned, even though I don't go through all the material, I recommend, even when you first start studying, go through all of it. Even if it doesn't make any sense to you, flip the pages, read it. Okay, what are they talking about? Who? And then eventually, by coming to this study group or looking at the videos, you'll be able to pick out the key things on those pages. But you may have missed an important information if you did not read all of it. Because I'm not going to be able to tell you every single thing you need to know. The study guides are not the only resources for the CDFM. If you look, when you buy the book, you have a glossary, you have inserts of different regulation laws. The expectation is for you to go and, hey, let me pull up, what does this law really say? And read it. Can you just study the study guide and pass? I'm a living witness. And I had never worked in budget. I always worked on the finance side. I had never worked in budget, but because repetition, and understanding what's going on, think of building a process map. If I give you a blank sheet of paper and I give you a topic, I say fiscal law. Can you jot down everything you know about fiscal law? So that if I ask you a question, you know what right looks like, so you'll be able to differentiate what is the wrong answer. So those are just some tips. And when you have a multiple choice exam, you have to know what right looks like. So you'll be able to pull out those keywords and know which answer to select. All right. So any questions on anything we've covered up to this point before I go into the fiscal law?
No, ma'am.
Okay.
No, ma'am.
So at first, go ahead. Okay. Miss Sheila, did you say something?
I was just answering, said no, ma'am.
Okay. Because these laptops, I have to get me some external speakers because it's hard to hear. So on occasion, you'll see me do one of those. I was going to use the slides that I uploaded, but I want to go through the book because I want you to see what's in the book. And then whether it's the YouTube or I have some materials that I sent out. If you haven't received it, just send me an email so I can forward it to you. Additional information. All I'm doing is taking the same information, putting it in a different format for you to study so that you can see it in a different light. All right, so fiscal law accounts for the majority of the questions on your module 1 exam. So that's why we're going to module 3, competency 1, which covers the overall fiscal law. even though each of the modules have their own inserts of fiscal law. You are expected to know all of it. So let's say module 1 only had gifts. That's the only thing they talked about. They could still ask you on the exam anything else in this fiscal law section of it, because the regulations are the same. If you try to argue the point, they can say, okay, well, did you go to the regulation 31 US Code 1301? Did you read that? Did you study that? You're like, no. Okay, so all right, so enough of that. All right, so let's start off on page 317, fiscal law and the financial manager. So as you understand, financial managers, we have to be mini lawyers. Yes, you can always submit your questions to an ethics lawyer, but you're not going to be able to give them all your transaction. I'm not sure about this one. Can you do a legal review on this? So we have to understand the proper use, purpose, time, and amount, the regulations, the guidances that we receive from Congress, from the appropriation law. So on the slide that we're going to go into the different ones on the page 7, fiscal law, you got the Constitution that says Congress can do certain things, the president can, the courts can do certain things. We got to keep that in perspective. And oh, by the way, when we get our OMB circulars, they have guidance. So we have a lot of information that we have to weed through when we get these appropriations. So as a financial manager, you have to know and be qualified on fiscal law. So on page 8, 318, as you're studying a new topic, if I say Article 1, what do you say back to me in response?
Yes,
Automatically.
Article 1, that's the legislative.
Right, legislative branch.
Legislative, yeah. I'm sorry, I
Correct.
didn't want to confuse myself. Okay, yes, that's the legislative, yes.
Right. So legislative makes the laws, executive executes the laws, and the courts interpret the laws. As long as you learn them in that order, you'll be good to go. So automatically, just like when you're taking a test, if you're reading the question and it starts off Article 1, Section 7 gives the legal authority to this branch of government to declare war. Well, automatically, when you see Article 1, you should know, okay, hey, that's Congress. So you start looking. When you take an exam, and I'm going to insert this because I'm getting a lot of feedback. When you get an exam, read the whole question. Don't just read the question part way and see an answer you recognize and just check that answer, because it may or may not be answering the question asked. Because a lot of times when you're doing these exams, they will say, which one is not a function of Congress? Let's put it that way. So that 3-letter word not will tell you, okay, you might see raise revenue, declare war. You're like, ooh, that's Congress. And you start circling things, but they didn't ask you which one was. They said which one was not. So I just wanted to throw that out there. So as you can see at the top of page 318, that's a repeat for what we just studied in Module 1. Article 1, Section 7, raise revenue, delineates the bills. Article 1, Section 8, collect taxes. And Article 1, Section 9, no money shall be drawn from the Treasury unless you have an appropriation law in place. So these are all repeats. At the bottom, we talked about the GAO last week, actually, when we did the risk assessment, internal control. All right, so we have 3 GAO guidances, the GAO red book, yellow book, and green book. Think of a stoplight, red, yellow, green. Now they're introducing the red books. So the red book deals with what?
Appropriation law.
Yes, ma'am. Thank you. Appropriation law. So red, yellow, green. Appropriation law, what's yellow? And it's not on the page. Just recapping, what's yellow book?
Auditing.
Auditing, that's correct. And what's the green book?
That's internal controls.
Internal control. Appropriation, auditing, internal controls. So now we're going to be looking, because fiscal law, we want to know what are the guidances, what are the rules, what are the laws dealing with the use of the appropriations. So the appropriations law book is the red book. That's all I'm going to say about that. What does GAO stand for? Government Accountability Office. Who do they work for?
Congress.
They work directly for Congress. That's correct. I got to learn to pause, I know. All right. They work directly for Congress. They audit the executive branch. Why do they audit the executive branch? Because the executive branch is the one that gets the budget. Once the budget is passed, the money goes to the executive branch based on what Congress stated are the do's and don'ts. On page 319, let me get my little glasses, 319, the Budget and Accounting Act, that's a law, and you need to look at it for 1921. It did three things. It required the president to submit the budget to Congress no later than the first Monday in February, even though it doesn't state it in front of me, but because I learned it in Module 1, I'm going to repeat it the way it's stated. The Budget and Accounting Act also created the OMB position, Office of Management and Budget. Back then, it was called the Bureau of the Budget. And the third one, it established the GAO. So I thought those were three important things. The Budget and Accounting Act of 1921. Any question thus far? All right, page 3110, you see the charts with the different laws and description. I want to bring back to your memory the last one on that page, as we talk about OMB circulars. Whenever you have a law that's enacted, then OMB will then give you guidance. They publish that guidance in an OMB circular. And we've talked about A11, anything dealing with the budget is covered in OMB circular A11. This one comes up consistently throughout the CDFM. All right, so what are the sources of authority on page 11? I'll start with that topic. You have fund certifiers. That should be no surprise there. You can either have fiduciary certification or liability or pecuniary liability. What's the difference? So fiduciary is the fund. You're certifying that we're using the right account, the right appropriation.
Oh, okay, okay.
So I use F. Go ahead.
No, go ahead, finish. I'm thinking out loud. Go ahead. I'm sorry, Miss Helen. Because I'm looking at the pecuniary, say that right?
Pecuniary.
Yeah, that's the dispersing agent.
Right, so.
Okay.
Fiduciary is really just the paperwork, the fund. I'm making sure, okay, you want to do this. Is this the right appropriation? The right amount? Okay, I'm certifying you're using the right fund.
Yes.
Pecuniary are those folks like defects who they have pecuniary liability because once they click that button, the payment actually goes out.
Yes.
So that final stop there. So two different certifiers. So they have on the bottom of page 11, it goes into what a fund certifier is, fiduciary certifier, and the pecuniary is the second set of paragraph. So they give you the examples, dispersing officer, cashiers, so the people who actually make the payments. And they have to make sure that it's accurate. that final certifier has pecuniary liability. Now, it's not listed here, but pecuniary liability often means that if the payment is erroneous, we could be subjected to paying that money back. If it turns out that it was a fault of ours, whatever the findings are. So that's part of, and I think of pecuniary as a punishment. The word P, the letter P, pecuniary, I could be punished for sending out the wrong payment, disbursement. So part of that brain memory function of trying to remember things is using that first letter and making it like a sentence out of it. All right, so the meat and potatoes of fiscal law begins on page 12. Availability of funds. Purpose. Every appropriation has a specific purpose, a specific time frame that we can use them to do certain things, and a specific amount. So I'm not going to go over the annual authority, multi-year. We kind of know that some appropriations are 1 year, some are more than 1 year. Later on, we're going to look. Let me see if they how far back. Yeah, they do it on page 23. So later on, we'll go over the actual multi-year and so forth. What I want to point out is on page 13. Typically, when somebody violates the Anti-deficiency Act, we just say, oh, that's an ADA violation. Now what you're going to do is dig a little bit deeper to understand what ADA violation what occurred. Is it a violation of purpose, time, or amount? So under 31 U.S. Code 1301, so if you look on page 12 on that slide, you have 1301. So it's chapter 13, I guess it's like section paragraph 1 or something like that. But it's 1301, 1502, 1341, 42, and 1517. So purpose is covered under 1301. It says exactly what that means. Every appropriation is for a specific purpose based on law. 1301. On page 14, the purpose can be for mission, training, travel. They give you a list, miscellaneous, when we don't know where to put, what category to put it in. We put it in the miscellaneous items. On page 15, personal use of appropriations, the specifics. So those were general expenses, TDY. Oops. The specific authority is when it comes into law, such as the Authorization Law or Authorization Act. And we talked about Authorization Act and the Appropriation Act. Do we get budget authority in the Authorization Act? Yes or no? All I'm doing is looking at the slide on page 15, Authorization Act, Appropriation Act, and the CG decision. So in the Authorization Act, which is the law, do we get budget authority, funding to spend? What are your thoughts? What is the purpose of the Authorization Act? So the questions I'm asking, you got to be able to answer them because they repeat. So I guarantee you, one or all of you going to come back and say, oh yeah, there was something on the authorization or the appropriation. Authorization Act authorizes the program. So remember that congressional budget resolution where they look at the budget to figure out what their guidelines are going to be, and then they go to the authorization process. The authorizers are authorizing the category of programs that we are allowed to operate in that fiscal year. We do not get budget authority from the Authorization Act. Which act gives us budget authority? Which act? Go ahead.
That would be in the Appropriations Act.
That's the appropriation.
Okay.
You have to remember the differences because I've had people feedback where people said sometimes if you read the question, It might say in the Authorization Act, we received 5 million, it stated 5 million for this program. In the Appropriation Act, it stated 2 million for this program. How much funding do we have available? Remember, even though the Authorization Act may state funding in it, we don't have any money. You only get budget authority to spend money in the appropriations. All right, who can tell me what CG stands for? Nobody gonna say Command in General? Nope, because it's not Command in General. What is it?
Comptroller General here. Under
Right.
specific, oh, okay.
That's correct.
Okay.
That's why I'm pointing it out, because most time when people see CG, they automatically think it's a Commanding General. Whenever you're dealing with the CDFM, CG stands for Comptroller General. What is the significance of the Comptroller General? Why do we care the Comptroller General decisions? What is the significance, the importance? Because who does the Comptroller General work for? Why do we need their decisions? Who do they work for? Because the Comptroller General is the individual in charge of the GAO. So remember that GAO we started off with?
So they work for Congress.
That works for Congress. So the title of the person in charge of the GAO is the Comptroller General.
Okay.
So all that red book, green book, all of that stuff falls under that Comptroller General. That's why we have CG's decisions. So those are your specific authority.
Okay.
So again, purpose 31 US Code 1301. So on page 16, when you're looking at the right purpose for specific appropriations, you have to do this 3-part test. And we probably do it without thinking about it. Does what it is that I'm trying to purchase bear a logical relationship to the appropriation that I'm trying to use? That's one. Number two, I got to make sure that what I'm trying to purchase is not prohibited by law. That means Congress already says, nope, you cannot buy these particular equipment. So just because we want to do it, if a law says we can't, then we cannot. And then the third part, we got to make sure it's not funded elsewhere. We always quick to run out to try to get a contract for something, but what if it's a supply that's provided in the supply system? So if it's already
ordering from the supply system.
Correct.
Yeah.
So the third part is that we should be going through is making sure that it's not funded elsewhere, or that funding wasn't already provided for that item. So we should not, as financial managers, just because we get a request, just go ahead and pay things. Contract here, contract there, before you know it, you got a bunch of contracts for items that are typically provided elsewhere. So purpose, 31 US Code 1301. You look at, you have general expenses, specific based on the laws, and then you have the necessary expense doctrine. Logical relationship, not prohibited by law or provided elsewhere. So I just summarized that whole, 3 pages right there, 4 pages. All right, so now time begins on page 17. Fiscal law, purpose, time, and amount. Time is governed under 31 US Code 1502. Purpose is 1301, time 1502. Again, I know I'm repeating it because I'm trying to learn it. You're trying to learn it, so that's what you need to do. Repeat it and then continue. So every appropriation has a specific timeline. That's what this is talking about. What are you looking at for timeline on page 18? Bona fide need. What the bona fide needs rule says is basically current year funds should be used for current requirements,
Requirements.
right? That's the basic rules for bona fide need. So I shouldn't be buying something that I know I don't need till if it's, well, we're in February, and then it's something I know that I don't need until December, but I'm trying to buy it now if there are no issues with lead time or anything like that. So bona fide need, current year dollars, current year needs equals. On page 19, what do I need to know about services? So I'm going to break it down for you. There are two different types of services. Like you have here service contracts.
Yes.
There are two different types of services. A service can either be severable or it can be non-severable. So you got to know the difference. Severable contract means I can end the contract early, but I will still would have received a benefit up until that point. And it won't hinder anything. I still got a benefit up to that point. A non-severable type of service means the whole job has to be completed before, oh, I can't end the contract because the whole job has to be completed for me to get a benefit from that service. So does everyone understand the basic? Because I'm going to take it another level. So I got to make sure you understand that piece. Any question on that piece? Okay. So what you need to know now is non-severable is easy because it's a job that has to be completed from start to end. I have to obligate the full amount of the money at whatever point that contract is issued. Doesn't matter if it crosses fiscal year, no. If I need to pave the parking lot, I need to paint a building, I need to repair a building. If I'm supposed to repair the whole building and I only fix one corner of it, I'm not getting a benefit, so I have to pay the full price regardless if it crosses fiscal year. So that's the non-severable. Here we go with the severable. You know there's exceptions to everything. A severable service, the easiest one I can think of because we have it here, is a cleaning service. That means people come in once a week and they clean, they vacuum, take out the trash. That's a severable service. Because any point, if I no longer need a service, I can end it. What you need to know on the first bullet on the top of page 19, severable service, is how long the contract is. If the severable service is 12 months or less, you will obligate the full amount. Let's say it's the 1st of September and the period of performance begins the 1st of September and that contract is awarded, I can use my current appropriation to pay for the full 12 months of that contract, even though it's going to cross into the next fiscal year.
Right.
However, there are different severable contracts. Some severable contract may be a 13-month contract, 14, 15, and whether they call it option year or whatever. Anything more than 12 months, I can only obligate up to 12 months and then subject to availability of funds for the additional months on that contract. So when you read through severable contract, I think the first and the second paragraphs, that's what they're talking about. So understand the differences between the services, severable versus non-severable. Severable contracts, 12 months or less, I will obligate the full amount regardless if it crosses fiscal year. Because most likely it's not going to, the contract's not going to start 1 October and you take it to September. Most likely it'll be in the middle somewhere. So it doesn't matter if it crosses, as long as it's under 12 months. Any questions on services?
No, ma'am.
Okay, so they give you an example of a non-severable, that next paragraph down in the middle there on 19, training, right? If you go to a school that has a formal training plan, you have to complete all the requirements to get a go at that station. That's a non-severable. So you can't say, you know what, I know this is a 5-day course, but I'm gonna leave in day 3. Can I have my certificate? No, you got to finish all 5 days. So training is a non-severable. Page 20 switches gears. Oops, sorry. So what page 20 is talking about, the first bullet, if the Appropriation Act is enacted prior to the start of the fiscal year, what most of us are familiar with is the second statement, second bullet, subject to availability, because we don't have an appropriation law in the beginning of the fiscal year, so it's subject to availability of funds. However, the first bullet is saying sometimes, and we've had a few instances where the Department of Defense had their budget by 1 October of that fiscal year. So what they're saying is, if you have a budget, so let's say we're in FY23, fiscal year 23, and it's September, and they've already appropriated the FY24 budget. That is saying that we can enter into contract citing the FY24 budget. If you already received your authorization and your appropriation, your allotment. Or you have two choices, or it's subject to availability of funds for FY24 if you have no approval or you're operating under a CR. Any question on permissible actions at the start of the fiscal year when it comes to appropriations? Okay, I don't hear any questions. Page 21 talks about termination of contract. It either can be terminated, and most of this is written in the contract, contractor default versus convenience of the government. So I would reckon to say probably all the government contracts have some type of clause in there saying if the government no longer needs this service, we can sever our ties. So convenience of the government, that one's easy. Contractor default. If you hire a contractor, they got a contract to repair a building, and you consistently have issues with them, whether it's the electrical or they're not performing to standard. So they defaulted on the contract, but I still need that building repaired. So I work with the KO, the contracting officer, and I get that contractor fired, or, hey, they're not doing their job. How do I get the job completed? What are some of the processes? What are some of the things that's going to happen if you have that situation? Any thoughts? So you hire somebody to do a job, and most of the time, that's why you have a contracting officer representative, COR. Your job is to monitor that they're actually performing to the contract. So let's say they didn't perform to the contract and they got fired. So some of the things you're going to have to do is working with the KO, and the contracting officer will determine if we accepted some of their work, they got to get paid for that work. Right. If the COR just signs off and say, yep, they're good, and don't go check it, if you sign off, you got to pay for what they did up to that point. But oh, by the way, I still need that job done so that contractor can send out another bid. If it's not, to get a second contractor to come in and complete the work. However, and I don't know if they probably won't say it there until later. However, if we have to change the scope of that contract, if the funding is, let's say this particular guy was getting 5 million and the next guy come in, the lower bid was 10 million. Then because it's so much of a gap, if that request will probably have to go back to the approvers, whoever approved the original request, because you got that price creep. Because let's say he has to repair what the other guy did, he's going to charge more to be able to do what you need to do. So there's some instances where you can complete the job with the remaining funds if it does not go out of scope or the price does not increase too much. All right, so that's about it on that. Page 22, 3122 goes into appropriation life. So we're going to get ready to go into the life cycle of an appropriation and the different types that we deal with. As we mentioned earlier, annual, 1 year, single, multi-year, and no year. What is an example of a no year appropriation?
An example that I had, when we processed NATO funds for Operation Enduring Freedom,
Mhm.
and the different countries, a part of the NATO trust, they would put their money in, or maybe it was a T fund. Wait a minute. Never mind. I think it was part of a T fund. Never mind. Never mind. Sorry about that.
Okay.
But I do know what X funds are. They are.
Okay.
Yes.
And that's correct. They are X funds. So it's either going to say X funds or no year.
Funds.
And
Yes.
the biggest one, and I'm going to say it because even though it does not show up right here, somewhere either in this section or the other modules, the working capital fund will come up.
Yeah.
And what that is, think of your commissary, since everybody's familiar with the commissary. The commissary gets funding. They take the funding, they buy the food item to put on the shelf, and they charge the customers based on what it costs them. So no different than the civilian side. But the big difference with the no year on the government side is the working capital funds cannot earn a profit. So their goal is to break even. So if you notice, probably, and usually they charge the same rate for a year. So if you notice this year, you might pay a certain amount for whatever food item you get out of the commissary. Then the next year is like, oh, this went down. Or sometimes things will be cheaper in the commissary versus in Walmart, because the goal of the working capital fund is to break even. So they have to alternate their prices. If the prior years they consistently show an increase, then you know they have to drop their prices the next coming years. So I just want to throw that out there. Working capital fund. Be familiar with that name. You'll hear it again. All right, so let's go to page 23, 3123. You have your 1 year appropriation, DOD appropriation, description, and the period of availability. MILPERS and O&M are 1 year, annual, single year. Those are different terms you can use. Expense type, if you look on the far right, these are expense type appropriations. So you have 2 of those. Then you have RDT&E. Those are 2 year appropriations. And we'll talk about what that means in a minute. Procurement. I'm buying things. Those are 3 year investment type. 3 years, multi-years are typically your investment types, because SCN, shipbuilding, conversion, Navy. That's where they build those Navy ships. Those are 5 year appropriation. They're an investment. I don't think you can build a ship in a couple of years. I don't know. MILCON, military construction, are also 5 year appropriation. What does that mean? MILPERS and O&M, that means they're good for new obligations based, whether it's 1 year, 2 year, 3, or 5. Under the O&M, the second one down, and I need to point out a few things for you. Typically, procurement, if I'm procuring something, buying something, I will use procurement funds. Military construction, if I'm building something, I can use MILCON funds, but there are always exceptions. So the exception is in O&M, and 1, 2, 3. So you see you have day-to-day, headquarters, civilian salaries, travel, fuel, minor construction up to $2 million. In the 2020 book, it's $2 million. In the older books, I think it was like $1 million. So any construction project, minor construction, less than $2 million, you can use O&M funds to do it. The next one also says if I have procurement, anything I need to buy, procure, and it's less than 250,000, I can also use O&M. So I wanted to point those two out for you, because I think these are the only areas where you'll see that. O&M can be used to do minor construction, anything 2 million or less, and procurement 250,000 or less. Any question on the appropriations time limit? And I'll show you in a minute how this information may be presented to you again, because I promise you, you're not going to see a nice chart on the exam and then you have to just fill in the blanks. I promise you. And even though I don't see their exam, that's not how the question will be asked.
So you
So
said
you got no,
procurement, O&M can be used for procurement of 250,000 or less, right?
yes.
Okay.
All right. So page 25, 3-125. So you see that little light cycle chart at the bottom? If you see the information that we just went over again, it's most likely going to be based on these phase 1, phase 2, and phase 3. So let me explain it first, and then we'll do an example. Every appropriation has a current, what we just went over was the current account. They're available for new obligations, new contracts. Then every appropriation will enter into phase 2, canceled, not canceled, expired. And then they stay expired for how long?
5 years.
5 years. So let's say I had a military construction in phase 1 current, it was 5 years. 1, 2, 3, 4, 5 fiscal years. Remember, with fiscal year. Then it expired an additional 5 years. So now we up to 10 years we're managing that fund. And then the 11th year enters phase 3, canceled or closed. So what you need to know is once it enters each of these phases, what are you allowed to do with the fund? Phase 1, new contracts. I can do what I need to do. Phase 2, when appropriation enters the expire state, you can only make adjustments to contracts that was already in the system. You can't just, oh, I need some FY22 funds and let me just do this new contract. No, I have to go ahead. Yes, ma'am.
No, no, you go ahead. I'm talking. I'm sorry. I'll mute myself. I'm sorry.
Okay. Yeah, because I see your name light up. So I want to make sure I didn't miss anything. So expired is making adjustments to contracts that were already established before that fiscal year closed or before we crossed over into a new fiscal year. Then once it's phase 3 and it's closed or canceled, we can no longer use those funds. Like right now, we are closing out FY18 transactions. Once we hit FY24, we can no longer control or do anything with those FY18 funds. But what happens to the funds? We lose accountability of it in the sense that, okay, we can't control it, we can't spend it, we can't make no adjustment. But those funds are returned to the miscellaneous receipts account in the Treasury. So remember, all the money comes from the Treasury, even though we don't physically see money, but everything comes from the Treasury after they get the appropriation law. So once your appropriation is closed or canceled, then the funds are returned to the Treasury. But there are some exceptions. And if you can read underneath each phase, like under the close, it'll tell you, but go to page 27 and I'm gonna come back to 25, so don't close that. So they went over, let's see, on the bottom of 26, expired, canceled on the top of 27. But what I want to point out to you, after it's canceled, and let's say you get an invoice that comes in and it happened to be, let's say it's FY24 and an FY18 bill comes in, but I don't have any more FY18 funds. What this 1% requirement is saying is you can use up to 1% of current appropriation that matches up exactly as the older one to pay that invoice. Otherwise, they have to go, you got to send them to DFAS or whoever. 'Cause I'm like, I ain't got nothing for you. So 1% rule. So all of that I'm stating is once an appropriations is canceled or closed, you have a 1% rule where you can use current appropriation to pay for any incoming bills from that canceled account. Does everyone understand that? Make sure I'm translating that properly.
Yes, ma'am.
Good? Okay.
Yes, I
All right.
understand.
So what I wanted to do now, going back with page 25, I'm gonna try to give you a simple problem. So you may get something like this. Okay, today's date is 3 December 2005. You just received procurement funds. When will these funds be closed or canceled? Again, today's date is December 2005. You just received procurement funds. When will these funds be closed? I give you all a couple minutes.
Oh, September 30th, 2008.
And okay, let's see what everybody else gets.
Okay.
Then we'll walk it through together.
Okay.
Anybody else want to try?
Does it depend on the amount?
No,
No.
the dollar amount itself doesn't matter.
Then I come up with 2008 as well.
Okay. Remember, I want to know, when is it closed or canceled? So let's walk through it together. Mr. Joseph, you want to take a stab at it? Kind of quiet. All right, so let's
No,
walk
I'm
through
just listening. I don't have a study book yet.
Okay.
Yeah.
All right, so procurement funds are good for how many years on phase one? Current for how many years?
3.
3, right? So procurement is FY. So first of all, if it's 3 December 05 or December 05, what fiscal year am I in?
2006.
I'm in FY6, fiscal year 06.
Okay.
So that's how you have to kind of walk it through.
Yeah.
And if it's good for 3 years, that means it's good for fiscal year 6, 7, and 8.
So it would actually expire in 9.
No,
Oh, okay, never mind.
you have half of the answer. So we know that it's in phase one, current for 3 years, and the 3 years, now that I know which fiscal year I'm in fiscal year 6. So that period that is in phase one is fiscal year 6, 7, and 8. Then what's the next step after phase one? Phase 2 is expired. How long is the appropriation expired?
5 years.
5 years. So you got to give
Yeah.
the full 5 years. So 5 years goes FY 9, 10, 11, 12, 13.
Okay.
So that's how you're going to do those. And then it's closed FY 14.
Okay.
I understand why you did it that way. Okay.
That's how you're going to have to do it. 'Cause that's how, if you see it again, like I said, they're not going to just give it to you like the chart on 23 is based on the information they can think of multiple choice. Based on the information they give you, then you got to be able to decipher. So you got to know, they have to tell you which appropriation you're using And most likely, that's why I went with 2005, because you're gonna get an older date. You're not gonna get, well, today is 1 February 2023, because most of our minds like, okay, I'm today. But once you start thinking of 2005, what? I don't even remember yesterday. So I know it in the PPBE course, when I taught it at Fort Jackson, we had some of these type of questions, and that's how they told us to write them. So no different than if I say, okay, you have military construction funds. It's January 2006. When are these funds in the expired state? So you walk through, okay, it's Milcom. All right, first of all, you need to know what fiscal year you're in. So did everybody get all what I stated? January 2006, so January 06. Milcon, I picked the ones that have multi-year because it's usually harder. And when are they closed? All right, so if it's January 06, what fiscal year am I in?
06.
I'm in 6. So it's fiscal year 6. So, and it's Milcons are good for 5 years in the phase 1. So 06, 7, 8, 9, 10.
11.
Nope, fiscal
No,
year 6,
10.
fiscal year 7, 8, 9, 10. That's my
Okay,
5.
Okay.
And then it stays expired for an additional 5
5
years,
So 15.
right? So from 11 to 15, it's in that expired state, and then it's closed
On
FY
16.
16.
FY.
Got
Right.
it.
I'm
Okay,
sorry,
so
say
that's-
that again. It's closed when FY.
16. Remember, you're operating on the fiscal years. So it's a whole fiscal year. So expired from fiscal year 11 through 15. And then when 16 comes in, it's closed or canceled.
Okay.
And what can you do when the appropriation is in the expired state, that 5-year expired state? What are the only options you have?
You can adjust.
Make adjustments. That's it. Upward or downward. We need more funds on this contract. We are returning funds, okay? And what can you do in phase 3?
You can no longer do obligations or adjustment to the obligations.
So no obligations, no adjustment. But you do have that 1% rule. What does the 1% rule say?
That you can use current year funds up to 1%. And after that, that's where a new contract would have to be
Correct.
granted.
Correct.
I have a question about that one. So it's 1% rule is one, correct me if I'm wrong, is use current year funds for expired cancel bills, correct?
Right, right. So let's say, okay, so we just closed FY 17. So let's say we got an invoice from something from FY 17 and it's for O&M, Omar. If you have Omar funds, you can use up to 1% to pay that bill. Let's say it's only $100. You can use up to 1% to pay that bill without being questioned, audited
Okay,
for it. So that's what it's saying, of current
perfect.
funding to pay for that, but it has to be the same appropriation.
I
Everything
was
else
about
got to be the
ask
same.
you that. Okay. I was just about to ask you that. It still has to fall in the same appropriation class.
Yeah.
Okay, you answered that.
Correct.
For me. Okay.
Thank you.
Yes, ma'am. You're welcome. All right. So a lot to make sure you understand page 25. All right, so all of that was time. 1502. So purpose was 1301, time 1502. And on page 27, as you can see, amount 31 US code, that's anti-deficiency, you can violate 1341, 1342, and 1517. So what we're going to do now is look at the differences. Like what is covered on the 41, 42, and 15, 17. So on page 28, it goes into US Code 31, US Code 1341. An officer or employee of the government may not make or authorize an expenditure obligation exceeding an amount available in an appropriation or fund. That means if you got an allotment, you can't exceed it. If you got the appropriation, you can't exceed the appropriation. Involve the government in a contract obligation for payment of money before an appropriation. Okay, so all of this is mainly about an appropriation. We can't spend it before we get it, and we can't spend no more than what we have. 1341.
But it is hard to spend it before you have it.
Yeah, because we have a lot of checks and balances in place by the time
Yeah.
it gets down to us.
I was gonna say, yeah, even under your legacy system, it would still been difficult to do. So, yeah, okay.
Yeah. On page 29 goes into different forms of budget authority. Remember when I was talking about you have to have budget authority to spend the money. So how do we get budget authority? We get it from the appropriations law. So you have appropriations, contract authority. They have, the KOs have authority to enter and spend money on contracts, borrowing authority, offsetting receipts. So you can look at that list. I think it's what, 5 of them? Yeah, on page 29, different types of budget authorities. Earmarking on page 30, what does that mean? Is sometimes when Congress appropriates the funds, they say you cannot exceed, they don't want you to spend no more than X amount of dollars on buying whatever it is.
Yeah.
Or they put a floor on it. A floor saying if they want to make sure that you spend money on that particular project, they can say spend no less than, because they're giving you a floor, that means you have to spend it, or they put a fence around it. You can only spend for this particular purpose. So these are earmarked, your terms that are used. So that all falls under 1341, cannot exceed the appropriations or spend more than what you receive. Now on page 31, you go into 31 US Code for amount 1342, deals with voluntary services. In most instances, if you cannot accept voluntary services. If you have a government position and someone wants, you know what, can you train me in what you do? You don't have to pay me, you just come in. What this is saying is oftentimes if that position is to be a paid position, you cannot legally have somebody come in and train them and they volunteer to do the work. But the exception says, following interpretation and decision, if the compensation for the position is fixed by law, then an appointee may not agree to serve without pay. So that's what I just stated. If the law says that's the GS 12 position, it's a paid position, and you know what, so-and-so, general so-and-so spouse she used to be a financial manager, she want to keep up her skill, can she come in until whenever you get somebody in that position? No, that's wrong. If the level of the compensation is discretionary, that means you can change it whenever you feel like it, and the compensation can be set to 0, then an appointment without compensation is permissible. The only instance I could think of is probably like the Family Readiness Group. I don't know of too many organizations where they allow, if it's a paid position, then you're allowed to put it down to 0 so somebody can volunteer. Does anyone have any examples? I don't know of any. Okay. Third bullet says the service offered clearly and distinctly as gratuitous with a proper record made of the fact does not violate this statute against acceptance of voluntary services. However, the last bullet, statutory authority. That means those particular organizations already have the approval to accept volunteers. The examples they give, Red Cross, Candy Stripers, museum volunteers. So the third bullet is referring to the fourth bullet, is if they keep track of the record of how many hours they volunteer and so forth, and they are authorized to accept volunteers, then that's okay. So 1342 deals with voluntary services. 1341 is appropriation. 1342 is voluntary services. So the last one under amount is on page 32, deals with apportionment. All right, who could tell me what that word means, or who does it apply to? We dealt with it in module 1. Who apportions funds? All right, so to
The
answer,
The legislative apportions the funds.
nope,
Okay.
try
Is
again.
it the OMB? It would be the
OMB.
executive.
Ah, okay.
Okay, so that's why, and they use all A words, which can make you confused. But if you look on page 33, Congress appropriates. You got to make sure you know the difference in the words. Then once Congress appropriates the funds, OMB apportions the funds. Apportionment is OMB down to the agencies, and then the DOD issues allotments. We commit, obligate, and we outlay the funds out of the treasury instead of disbursement. So when you go back to page 32, and it's talking about an officer or employee of the United States government may not make or authorize an expenditure obligation exceeding an apportionment, that automatically lets me know, because I know apportionment happens between OMB and DOD, or OMB and the State Department, all the other departments. So they can violate 1517. That means when we get our allotment, if let's say we violate it and then it gets up to OSD and then OSD cannot fix it, then it becomes a violation of 1517. If you notice, none of these said a violation of allotment, because apportionment is a formal part. Any question on that? All right, so fiscal law, purpose, time, and amount. Purpose is governed in 31 U.S. Code 1301, time in 1502, and amount is 1341, which deals with appropriation violation. 1342 deals with voluntary services, and then 1517 deals with violation of apportionment. Any questions? So we're getting through all the weeds now. All right, so back on page 33 again. Congress appropriates. So two things happen when Congress appropriates the funds. We just talked about OMB beginning that apportionment process. What is the other thing that happens? What is the legal part that happens once Congress appropriates the funds? That's the Treasury issuing the Treasury warrant. Remember that? Remember, no money can be drawn out the Treasury unless I have an appropriation law in place. Article 1, Section 9. So when Congress appropriates, two things happen. OMB begins the apportionment process, and DOD, and okay, I'm gonna talk about that process in a minute. And the second thing is the Treasury issuing the Treasury warrant. All I'm doing is recapping stuff that you already learned in, or should have already caught in module 1, since this is module 1 focus. Because in the apportionment process, how that happens is once Congress appropriates, the agencies, DOD completes an SF-132, submits it like saying, hey, I see Congress appropriated the funds. They said defense is supposed to get 10 million. Here's my SF 132, please give me my 10 million. Then it goes to OMB, and OMB has 30 days to either give them their 10 million or give them 5 and tell them they'll get the rest later. And then DOD issues allotments to all of us. That falls under defense. So still on page 33, that last bullet, finally, the government liquidates the obligation by making a disbursement or outlay. But the term you need to learn, since we know disbursement, and outlay is the formal term that's used in the CDFM study guide. When the funds are removed from the treasury, either pay your obligations. So they have augmentation on 34. I'm not covering that. We're going to move on to 35, the gifts. So this is a recap, and they even tell you on the last paragraph on page 35, they're referring you back to module 1, competency 2, which goes into more depth, because actually this is only one paragraph, but you have more information in module 1. So the basic thing in accepting gift, can I accept a gift from a contractor? It's not covered here, but it's covered in module 1. And it's not on this page.
Yes, you can accept a gift from a contractor. However, it cannot exceed for an entire calendar year of $50.
Okay, and the individual gift? What's the limit
Is-
on that?
Yes, there is a limit on that, and it's $25.
20.
$20. Okay, okay.
Yeah.
Okay.
So the $20 gift. So he gives me a pen and the pen is $20. I can take it, $20 or less. If he comes back, give me another pen and it's $20, I can take it. If he comes back and try to give me a third pen for $20, I can't take it because the total of all three exceeds the $50 limit for that year. So I wanted to throw that back in there. Pulling your knowledge together. That's how you're going to be successful on this exam. You cannot take the information in individual parts. You got to be able to pull it all together and understand that, oh, that's the same thing they were talking about in that part of it. So even when they talk about gifts to employees, all you got to remember, and they didn't even tell you the limits here, you had to go back to module 1. So gift to employees, what is the limit there for subordinate? Somebody's leaving and they're coming around collecting money. If you feel like donating, what's your limit? $10. Just remember $10. Employees are limited, so no one can force you to donate. And if you do donate, you're limited to $10 to donate towards somebody's gift. All right, so page 36 says, okay, so somebody violates an ADA, Anti-deficiency Act. They violate either the purpose, the time, or the amount. What are the penalties that are possible? Page 36 says you can have administrative penalties or criminal. Administrative is, okay, I'm going to counsel you, I'm going to retrain you, or I'm going to move you to a different section because you really don't get it. Or criminal, because if it's associated with, okay, you intentionally try to defraud the government, $5,000 fine, 2 years imprisonment, or both. And most likely, if you get this tagged on, you might end up getting some more criminal charges outside of ADA specific. So $5,000 fine, or under ADA, they're only limited to $5,000 fine for as a criminal act, or 2 years imprisonment, or both. All right, so what if I identify an ADA violation on page 37? Based on the DOD FMR volume 14 paragraph that's listed, requires notice of suspected. So if I think that we violated, I did all that research checks, you have to submit a notice to your hire within 2 weeks. I think in the older study guides, it said 10 days. In the newer ones, they said 2 weeks. And when you read through that, it also says Then you have to do a preliminary review, and the review must be completed within 4 months from identifying that ADA violation. So I repeat that. All of that is in that paragraph on page 37. If you identify an ADA violation, within 2 weeks, you must notify your hire. Then you must conduct a preliminary review, an actual investigation to find out, is this a true ADA violation? Were we supposed to use procurement funds? Something cost $300,000, and instead of getting procurement funds, we use O&M funds. That's an ADA violation in the amount. And within 4 months of that identification, we must complete that preliminary review. Yes, Ms. Sheila.
I have a question. Maybe I have the older book. I have it here highlighted that it says that the ADA to be sent to higher headquarters within 10 days of the discovery.
Right,
And
so
then
now
14, and then, right?
the newer books say 2 weeks.
Okay, so I'm
So
gonna
it's about
change
the
that.
same thing.
Thank you.
But the last paragraph is probably different, because if I remember correctly, the older book says something different. The preliminary review must be completed. What does it say in your book?
14 weeks.
Yeah, see, it might add up to 4 months, but in the newer book, it says 4 months from the date of initial discovery.
All right,
Oh,
I will,
okay,
I
okay.
will do just adjustments. Thank you.
Mm-hmm. All right, so let's see, can we get relief on page 38? In light of the explicit provisions, 31 U.S. Code 1351, it has been held that there is no private right of action for, so even if you made a mistake, even if you can't say, well, I didn't know, right? Because you could say, oh, ignorance, right? Ignorance is no excuse of the law. So we cannot, there's no relief under the ADA. So whenever it gets reported, an ADA violation often gets reported all the way up, I think, to the president, to the executive branch. And examples of ADA violation is given on the, starting on page 30, the bottom of 38. So you can read through some of the things. Let's see. And the key thing it says on the example, violation of ADA never depends on whether you intend to do it or you didn't understand something and you did something wrong. Most likely by the time it gets to that level, if nobody's able to fix it, it's either you have criminal actions tied into it or something else is going on. Because most likely if your hire has the funding, or you can make the corrections, they'll make the corrections. So the rest of the fiscal law, let me see. Yeah, I'm gonna flip through a few of these now. So GAO letters, continuing resolution, more of that again on page 41. Temporary appropriation, stopgap. You understand all of that, but understand why we need a continuing resolution, because under Article 1, Section 9 of the Constitution, it says you cannot take any money out of the Treasury unless you have an appropriation law. So if they are not prepared to enact the Appropriation Act, then they have to use a temporary appropriation, which is the continuing resolution. So you got to be able to understand all that. Not just say no new starts, stopgap, temporary. What does it really mean? So this particular section has more information on the continuing resolution. So on page 42, under a continuing resolution, part of it is you have to operate under the same rate of operation. If you went TDY last year one time around that time you're operating under the CR, then you can't then be going 10 times. That's not the same rate. 43, rate not exceeding the current rate. So if it is the intent of Congress that as an agency has no more funds in the current year under the CR that they had available in the prior year. So that's all they're saying there. If there's a balance of unobligated funds that can be carried over into the current fiscal year, this balance must be deducted. Yes. All of it is repetitive. I don't want to read it. Okay, page 44, that first line. So let's say that you're operating under CR, and you've obligated X amount of dollars based on rate of operations from last year. You're doing everything right. And that first line is saying, if Congress comes back and then appropriates less than what you intended, it's saying, was that an ADA violation? No, it's not. Because as long as you're operating under the rules of that particular period, you're good to go. So it says, if you obligate at the current rate and Congress finally appropriates at a lesser rate, have you committed an ADA violation? And that answer is no. And then they give you the GO decision. So I wanted to point that out to you. Make sure you know sequestration means. That's where you have that government cuts, automatic cuts, and the term in the middle of that second paragraph talk about pay as you go. And basically, if you want to do something, you gotta stop doing something else, take the money and use it. So it's like a zero gain type thing. I think is what they're talking about here. Let's see. Must be covered by tax increases or cuts in mandatory spending. Does not apply. Yeah. The pay-go expires. So it says the pay-go statute expired at the end of 2002. It requires that tax cuts or increases in entitlement and other mandatory spending must be covered by tax increases or cuts in mandatory spending. So it's kind of like balancing off. Government shutdown, again, is covered on 46. And they list the different times. So there are instances where the government did shut down. I remember one year, so I'm guessing it's what, 2013? I know one year they're like, you better send me my money.
Yeah, it was in 13.
It was 13, yeah. I was like, they're serious about this thing where they held our paycheck. It was like, it was like, ooh, that don't feel good. All right, so let's see, mistake reporting. All right, so again, on 47, they go again into accountable individuals. Who are they? Dispersing officers, certifying officers, their departments, accountable individuals. So you just kind of look at the list. Most of this is information purposes, so. Advanced decision on page 49. That if you, as a certifying officer, if you're not sure about making a purchase or payment, it's saying you can get an advanced decision or legal review, for lack of a better word. On page 50, relief of accountable individuals. Unlike the absence of a relief mechanism for ADA, so remember, ADA was no relief at all due to erroneous fiduciary certification. Because remember, fiduciary is using the right or the wrong fund. Now we're talking about on the other side, the pecuniary side, provide a mechanism for granting relief to a certifying officer or dispersing officer for illegal, improper, or incorrect payment. The CG Comptroller General must grant relief under the following condition. So on the pecuniary side for your dispersing folks certifying, if it's a physical loss and the Secretary of Defense determines that the official was carrying out their normal duty when the loss occurred. You didn't do nothing extra. You were going on your mission. So most of these probably will be like when you're deployed and we actually carried around cash. The loss was not a result of illegal, improper, or incorrect. The loss was not the result of fault or negligence. That's the physical loss. Illegal, incorrect, or improper payment. Payment was not the result of bad faith or lack of reasonable care. The certification or payment was based on official records, based on the documents they provided. For basic allowance for housing, they gave me the right documents, a contract, a marriage license. I made the payment based on what they gave me. That was the person in front of me. No law specifically prohibited the payment, and the US government received value for the payment. So those are the exceptions for relief of accountable individuals. So these are your pecuniary certifiers. And then on page 51, statute of limitation. As financial managers, you probably want to know this, right? If it's an error, like, okay, you know what it's supposed to be? Yeah, I put an extra zero somewhere and then I had to go back and fix it. If the statute of limitation for error is 3 years from the time the Comptroller General receives the account. So it's not 3 years from the time you made the mistake. It's 3 years from the time the CG receives the notice. And then if it's fraud, there's no time limit. That means you can be out of the government, thought you got away with it, you got all this money that you've brought the government out of, and someone could be coming knocking on your door. So there's no statute of limitations on it. So the basic idea behind fiscal law is we must see things in writing before we actually spend the funds to make that purchase. So the established rule is that expenditure of public funds, spending public fund is good when Congress authorizes it. Not that public funds may be expended unless prohibited by Congress. What does that mean? Like with your, let's say, military standards. If something is not in the military standards, I've said it and I've heard people like, hey, the standard didn't say I couldn't do it. So we can do it. I can carry my headphones, or I could carry my cell phone playing. I used to do it and aggravate individuals. Have my cell phone playing music loud in my pocket while I was out running. It's like, hey, the regulation doesn't say I can't have my phone on. It says I can't put earbuds in my ear. So, but when it comes to the money, taxpayers' dollars, Congress must specify the do's and the don'ts. And whatever they say we can do with it is all that we can do with it within those timelines and fences and limits and guidelines and policies. All right, so you have a list of terms on page 52, starts on 52. Page 53, I want to point out one for you because this is the only spot I have found this information in the middle. It says 41 U.S. Code 6301 Feed and Forage Act. And I've had numerous people come back and say, yeah, I've seen that again in a different form. So the idea between the Feed and Forage Act is what it does is allows the Department of Defense, if they deploy somewhere and they don't have a budget to do that mission at that point, they're allowed to spend above whatever they need to spend. And when you read through it, if they need to purchase clothing, let's say they go to a place that's extremely cold and their personnel do not have the right gear and they have to buy it over there and they don't have the funding yet through the legal channels, under the Feed and Forage Act, long as they capture that cost, they can buy clothing, food, fuel, somewhere to stay, transportation. Is there something to do with medical, hospital supplies, not to exceed the necessities of the current fiscal year. So you got to be based on what they need at that point. So under the Feed and Forage Act, 41 U.S. Code, the DOD is allowed to exceed what they have for those particular purposes. So this is the only one that we have not seen anywhere else. So I wanted to point that out to you. Okay. And so you have some case studies at the back. I don't really go over those, but for fiscal law, you've taken fiscal law at this point. So you kind of know you got to read through the scenarios, but know that the exams are similar to this in that you get a small verbiage of scenarios. And based on the scenario, they're going to ask you questions. But your understanding of the basic knowledge of, okay, well, GAO works for Congress, OMB works for the president, those basic things, and knowing USD comptroller works for the SecDef and whatever else falls under there will determine your ability to answer the questions. All right, so I think that is it for today. There's a Fiscal Law 101 video on the YouTube page. What I did was I went through all 3 modules and even some of module 4, because all of that overlaps too for the other people who aspire to go to acquisition. Is I pulled all the fiscal law out of all of them in that Fiscal Law 101 video. So if you want to go back, go through this, then go back to that Fiscal Law 101, everything that I discussed today plus then some will be on that video. All right, that's all I have. I can stand by if anybody have any questions, concerns. Miss Sheila, you was excited about fiscal law. How do you feel now?
Well, I know I still have to study more, but it was really good, really good.
Okay. And you see, you have to go over the information
Yes.
multiple times and in different formats to make sure that you truly understand it. What about Miss Tina?
I did
Oh, go ahead.
I did connect the dots with module 1, so I was excited I was able to do that.
Okay, so
Thank
you're able to recall, hey,
Yes,
we
ma'am.
covered that, right? Because it all is going to come back. And even when you move on to module 3 and 2, all of it's going to come back again. So that's why you see me keep asking or repeating certain things, because it's going to consistently come up, and you need to be able to understand that, oh, it's not individually, they're actually all together. It's just that in a book, you got to break it down. They can't really show you that they actually work in the process together. Miss Tina, last minute thought?
I'm good. Thank you
Questions?
very much. I'm good. Thank you very much.
Okay. Mr. Joseph? Anything? I know you were kind of just listening in. You're still muted if you're talking. Okay, I think he fell out. He got scared. All right, well, this is Helen Thomas on the CDFM study group. Please consider subscribing to our YouTube page. What it does, it allows YouTube to recognize that, hey, people are clicking like, they're clicking on the comments. There's a lot of activity on this particular channel, so let's promote it more. Let's get it out there on the platform. So that's the purpose of clicking like or leaving a comment on the videos and so forth. So thank you all for stopping by. This is Helen Thomas and the CDFM study group. I'll see you guys again next time. Yeah, have a great day.
You too, ma'am. Thank you.
You as well, ma'am.